Am I audible? Hello, hello. Am I audible? Thank you. Thank you so much. Let's wait. So let's wait for a few minutes. Let's see how many people are joining. 3 are already here. Welcome to the live. You can post the questions, not a problem. You can post the questions, I will answer. Not only mutual funds, any of the things you want to know about regarding investment, either it is equities, trading, or something else, any of the strategies you want to discuss, please put it on the chat box. Let's discuss about it. Do not ask for recommendations, since this is a very public domain, and I'm not allowed to talk anything about recommendations or any biased, particularly in investing, so I cannot do that. Yeah, so this live is about investing in mutual funds or investing your money in equity markets, and how to generate your wealth in a longer period term or a shorter period term, or how to strategize your investment. So if you have any questions, please let me know in the comment box, and I will try to answer at best of my knowledge and regulations. So let's wait. It's 5 already. Welcome. Portfolio review, yeah, you can ask, but thing is that it is a very public domain, and I can give you some like overall view about it, but not specific to your portfolio. Definitely we can discuss about it. Yeah, suggestions can be taken. Yes, come ahead with come up with your questions. Let's discuss on it. So let's wait for some other people to join same time. And today's main agenda of this live call live is that recently one of the customer, not a customer, an investor contacted me, and he inquired about some FPI investing firm where he invested around 60 lakh rupees. Okay, he invested around 60 lakh rupees, and now when he wanted to withdraw that particular money, what he invested, his own money, they are not letting him to withdraw. Instead, they are asking him to pay 6 lakh rupees as processing fee or some other fee, so that he can withdraw his amount. So this looks very scammy thing, but we cannot exactly say it is a scam unless and until it is declared as scam. But the story how he was drawn into that particular thing is that he was directly added to a WhatsApp group. There they were giving him and everybody who was participating in that particular group, they were giving them very good hi Kasai, how are you? They were giving everybody uh, trade ideas or stock ideas. Okay, and those stock ideas were very good, and they some people really made money. After that, they asked them to open FPI account through them, and from that, hi Pratyushji, how are you? I am good. So from that particular application, they made them to invest in foreign stocks. So it showed them good returns, some IPOs or something which gave them 100% returns within opening time itself, like on the day of listing itself. But they continuously started investing more and more. But they, when the time has come to withdraw the money, they are not letting them to withdraw. So what I am going to tell here is that never ever go down into that particular funnel where you do not know people and you end up joining their group. Okay, use only official channels of anybody you are following. Hello Naveen ji, how are you? Thank you for joining. Okay, so do not add yourself into any of the WhatsApp channels or WhatsApp community or anything, any of the links which feels very suspicious to you, where you do not see that people personally, or you do not communicated with him, with that particular person. Do not do that, because your money is very important. Okay, that particular person hasn't even seen him, he does not know how he is looking at all. Okay, that is the biggest thing. So having said that, let's take questions from you. Then you can ask your questions, like you wanted to talk about your portfolio. Sai, if you have any questions about mutual fund investing, Pratyush ji, Naveen Kumar, any of the questions regarding mutual fund investing, or any of the things regarding investing, any of the insights or any of the strategies you want to discuss, please let me know. We can discuss about it. We can talk something about it, like put some light on it. Come up with your questions. I am ready to take that questions. Okay, and we are still fighting on that particular person. Okay, we have asked him to raise grievance queries in through SEBI grievance helps, and let's see how is it going further. Okay, so whatever the certificates they may show, even if it shows it's very genuine, then it might not be a very genuine in the personal space. Okay, Dan is asking something. He is investing since 1 year. Time horizon is 20 years, 2 lakh SIP per month. Perfect. With taking risk, as I will keep this invested 15 to 20 years. Don't want to go with too many funds. Fantastic. And see, what you can do is, Pradeep ji, hi, hello. See, taking risk is different, completely different. Okay, you can take risk at any extent, not a problem. But you should align your investment with the market as well. Okay, please do not put the numbers of your funds and other things. Okay, I will talk about Parag Parika also. That is also another agenda of this live. What I was saying is that, then you are investing 2 lakh rupees. Excellent. What you have to do is that you have to allocate your money properly according to the market. For example, if you see any of the sector which is very fairly priced, very well, like valuation is very great, then you have to put more. See, what happens is that in the previous webinar and previous live call, I exactly told this one particular thing. See, we can say we are very aggressive. We can say that I am going to put 80% or 50% into small caps. But is the fund manager really interested in investing in small caps? That is the very important thing. If they themselves are not ready, or not, or they are not seeing any value in small caps or mid caps or any of the caps, even if we are very aggressive and even if we are investing too much, it is not going to small caps or mid caps or any other caps. Okay, so you need to understand market when you are doing all by yourself. You need to understand how market is behaving, what are the valuation, what is the trend, what is the current geopolitical issues, what are the like for example the Trump tariff. Like recently he has increased 100% tariff to the pharma sector. So if you understand that thing, then you should come down with that particular sectors, or some of the exposures to particular sectors, right? So you align your investment according to the market and allocate it, and every 6 months or in 1 year you reallocate it, rebalance it, look at the market, how, where are the very attractive valuations are, increase there, decrease somewhere where it is very expensive. That is how you can extract more from the markets. Otherwise, if you say that I am very aggressive, I am going to keep it for 20 years, that will not work. The complete dynamics of investments is changing. The every new product coming in the market is different. Their logic is different, their agenda is different, their objective is different. So unit also change. Okay, the last 10-15 years it was different. You can invest and you can forget. That is a different scenario. Now it will not work like that. Okay, everything will change. Since you're doing it all by yourself, you need to go a little bit deeper with the market and understand it. Okay, and align as per the market is trending. Okay, And your SIP is excellent. I must appreciate that. And 15 to 20 years, you are going to do excellent with that. Okay. Next question was about this one, Parag Parik. See, Parag Parik, the free exit load for all the customers. Okay. What happens is that SEBI has come up with like it was there, it was an existing rule regulation from SEBI. Whenever there is a fundamental shift in a fund levels, okay, maybe their objective, their way of investing, the fund manager wants to do something else, they want to shift from flexi cap to something else. Okay, when there is a fundamental shift, they will have to give a free window for all the investors who wants to exit out of it, because you invested in that particular fund because you liked that objective, or you liked some xyz things from that particular fund, right? So the if the fundamental shift is going on, you might not, your investment may not be aligned with that particular fund. But in Parag Parik, nothing such has happened. What they have done is that they have introduced that IDCW option. It was not there before. The only growth option was there. Okay, Parag Parik FlexiCap direct growth, Parag Parik FlexiCap regular growth. Okay, now they have introduced IDCW for those people who want regular income as dividends. Okay, so for them, like it is a fundamental shift. So if somebody is not liking that, somebody is not wanting that, they can come out of it. But here nobody has to come out of it, because everybody is in growth fund itself, and most of the people want to go with the growth. And if somebody wants to shift it to IDCW, this is the time you can do without any expense ratios. That is why it is there. Okay, so you do not have to worry if you are a long term investor. Okay, and this is another opportunity for those existing investors to come out of that Parag Parik, because Parag Parik has increased its exit loads. It has increased the exit load for 2 years. First year it will be 2%, second year it will be 1%, and many people are not liking it. I personally do not like it, because like having such a big fund, and you want investors to stay for 2 years with first year with 2% and second year with 1% is not that great. Okay, because many other funds are giving it within 1%. Okay, but if somebody is still hinging on that or hanging with that particular fund, yeah, you can go ahead with that, not at all problem. Like the fund is excellent, their objective is same, they did not change any shift in fundamental or objective investing, you can continue. But if you want to change it to IDCW, you can do it without any exit loads. If you want to exit, you can also do that strategically. Okay, let's go with the next question. Okay, yes, then it was Naveen Kumar. Hi, would like to know about SIF, like Altiva from Edelweiss, Quiff from Squant. They are talking about long short fund, minimum is 10 lakhs. Yes, yeah, it is worth it. Okay, for those people who is having a bigger like AUM. Okay, if you are having some 30-40 lakhs as AUM, then you can shift 20-25% to SIFs, not a problem. But if you are complete investment is very low, then it is not a time to go there, because that particular product is very new and it is coming under hybrid category, not equity category. And if it is coming down by like 65% below, like below 65% in equity category, then it will be taxed as your income. You need to remember that. Okay, this is completely hybrid theory. Okay, they may go up to 20, they can go maximum up to 25% to derivative sectors, not completely. Okay, out of their total 100%. Okay, second thing is that you will have to maintain 10 lakh rupees. You cannot come down 10 lakh rupees. If you want to withdraw, you will have to withdraw all the 10 lakh rupees. You cannot withdraw 50,000, 1 lakh rupees like that. Okay, so that is another liquidity issue you will be facing if your AUM is very less. Okay, if your AUM is bigger and you want to diversify your investment style, then definitely that is a place you can explore. But this is very early stage of SIF. Okay, they must do well, they should do well, because it is a complete same structure, like same fund managers, everybody is doing that business since long time. Edelweiss is a great company, Quant is also good company. Like managing funds, they have a long history of doing business like this. This is a new product, they can explore some things and they can bring a very good returns in next 3 to 5 years. But since has I have sat with many of the fund managers doing this SIF. They have told that initially they are not initially, like in SIF, they are taking only 12% as benchmark returns, like just like the mutual funds. But the investment style and strategy is different, and which may give us upper hand compared to the mutual funds. Okay, so for you liquidity is the first thing. Second thing is that you will have to maintain 10 lakh rupees. Above that you can start SIP or you can do anything. And another thing that there is no exit, like once in a week or once in a 2 weeks only you have the option to exit. Even if you want to exit, you can enter at any point of time, no issues at all. Okay, exit loads are there, expense ratios are similar to mutual funds, no changes in that, maybe maximum of 2.1%. okay, and rest of the things will remain same. Keep the liquidity in mind, keep your AUM in mind, and keep that risk appetite in mind, because that will be little bit notch higher than, risk will be little bit higher than mutual funds, because since we have derivative option there. Okay, so Naveen Kumar, I think I have answered. If you have any more like questions upon that, you can ask. Okay, Prithvish ji asking, is recession is coming? Recession might come for a short period of time, but I do not see it in an immediate term, because it is the thing we used to, like in the market, everybody started talking since 1.5 years ago, and everything is evolving, and I do not think any recession is coming. Even if it comes, it will be for a shorter period of time, because there is a technological shift across entire industry. And whenever there is a technological shift, everybody fears about job, but the technological shift always brought us more jobs than before. Like even if you go back to 1995 to 2000 or 2005, in between that range, there was a shift in these computers, and everyone thought that everyone's job will be wiped off, but computers really brought much more jobs to the market. Okay, it is an evolving market, and I definitely do not think that a very big level of recession is coming. Okay, even if it comes, I think like many of you are prepared for that, like emergency funds or something. Please be prepared on that. Certain studies say that, Pratyay, hello, Pratyay, hello, hi. Then is asking, certain studies says that most active funds fail to beat index in longer run, especially in mid cap segment. Do you think we are better off with mid cap index when time horizon is long? Yes, definitely you can go with index fund, not a problem. There are pros and cons between index funds and active funds. Okay, in active funds what happens is that, okay, let's go with index funds. Index funds are exact copy of the index, and it is highly diversified. If it is tracking mid cap 150, all 150 stocks will be there. Okay, what happens is that if mid cap is going up, mid cap index is going up by 10%, your index fund will also go by 9.7 or 9.8%. okay, it will exactly copy that particular index. But in a market downturn, what happens is that it does not have any luxury of withdrawing its money out of equities. It must have all the money invested in particular fund itself. Okay, but whereas in equity funds, what happens is that the fund manager has the leverage, and he has the freedom to withdraw his money and invest in much safer assets. Up to 25-35% he can invest in debts, or he can go to large cap funds. During the recent market fall between January to April and or June, we can say, most of the mid caps and small caps had very minimum amount allocated to mid and small caps. It was as low as 13-18% in some funds. Some funds had only 25 to 30% allocated to mid and small caps, and most of them were into large caps. And one great example is Parag Parikh Flexi Cap Fund. It had almost 25% of its total AUM dedicated to like cash or debt funds to protect the downfall. Okay, so it is a general view about a particular thing, not exactly on the mid cap funds. Yes, in mid cap funds, what happens, like in index fund, what happens is that you have lower expense ratio. You have like, you are tracking, you are not at all looking at it, you are completely looking at a very long term horizon. Then definitely that is okay. And one more thing factor I want to give you here is that data point. What I am going to give you here is that when we had an analysis of 10 years rolling returns between active fund and index funds, the real difference between the two was mere 0.24%. I mean, like 0.24% was more in index funds, not in active funds. But the when the market downturn is there, right, when we face some market downturn, these active funds will give you more cushion during the downfall, because nobody wants their money looking at like evaporating like anything. If somebody's goal is nearby and there is a market fall, index fund will definitely wipe it off. okay, but active funds might definitely give some cushion to you. Okay, so yeah, there is no problem in going either way. Both of it is very good, but if you focus on your goal, it will tell you which is very most suited to you. Okay, goal is very important rather than the like index or this one, right? Reviewing is your portfolio. Yes, we can definitely review. Like we have Motilal Oswal SGB registered like advisors who can review your portfolio. You can connect me through, like, you can get my contact from my WhatsApp channel. It is in my bio as well. Okay, once that is done, we can get Motilal Oswal advisor connected, and we can review your portfolio. That can be done definitely, not a problem. Okay, Dinesh Bishnoi is asking, most quant funds, flexi-cap and small caps, given low return compared to others. We can continue, or shall I shift to other funds? Time horizon 3 to 5 years. It depends on how long have you invested, and since if you had invested already since 2 to 3 years, I do not think you should be changing it, because quant fund has taken a lot of hit during this market fall, and due to it some regulatory issues as well. Okay, now I think you should be waiting for market recovery. We are in a verge of market recovery, but like global tensions are making it a little problem, bringing up little more hurdles. So what you can do is that you can come out of it. If you really feel that you should not be there in quant mutual funds, you can come out 30-35% or 40% out of it, looking at your long-term capital gains and short-term capital gains, exit loads and everything. You can shift a little bit, because money will grow simultaneously whatever the market scenario is. Okay, and you can definitely shift and diversify out of that quant fund. The first mistake what you have done is that you have invested everything in quant fund. If you had invested already, you should have diversified. Okay, now it is a point where you can do it. Okay, if you have a lot of headroom for that LTCG and exit loads, definitely you can change, or you can stay, because market is almost like consolidated. It is already almost bottomed out. It may do well, because quant takes some like analytical strategy in their investing. They may do well. Okay, Walakani is asking, is Walalkani, I do SIP in Parag Flexi, HDFC Flexi, Nippon multi-cap funds. Okay, Nippon is performing poor. Should I continue or stick to PPFC and HDFC Flexi Cap, time horizon long term? See, like, I think you should be investing in particular fund looking at the not at the performance comes at the end. Okay, you should be looking at how the fund is helping you to reach your goal. How are they using your money? How much risk are they taking to generate your 1% return every time? Okay, if that particular fund is taking too much risk and not giving you returns, then exactly what you said is right, you should exit. If it is not, but it is only for a shorter period of time, maybe 6 months or 1 year or maybe 3 months, then this is not something you should be doing. You should be continuing with it. Okay, since you have more into flexi caps, I do not recommend you to go again with flexi caps. Okay, try to diversify, since you have longer term, right? Not 3-5 years or 7 years. You have very long term, so you can really diversify across the markets, taking some leverage in some other sectors as well. Okay, when we buy gold from ETF fund, does AMC actually buy that much physical gold? How it works at back end, if you have can throw some light? Yeah, definitely. See, what happens in ETF is that ETF is it's a instrument created by market participants. Okay, like market makers. What happens is that they will really buy, they will have physical gold with them. Okay, in like bullion, what we call. Okay, upon that they form assets, I mean units of ETFs. Okay, whenever there is more demand, they generate more units of it. They buy more gold, and they come with the ETF units. Okay, and same units are bought by the AMCs when you are investing through the mutual funds. Okay, and there are like physical assets in AMCs, in the like market participants, and they will have to have audit their all the like physical goods every month, and they have to submit to SEBI. So there is no question of having some fake certificates or fake ETFs in the market. No, that will not happen. You can invest tension free. Okay, that's not a problem. They will have physical gold with them. Wadalkani is asking, I prefer Nippon multi-cap for small cap exposure in case of small cap rally, as I fear about pure. Not a problem. You have done excellent, very good, because multi-cap will have small cap exposure. Okay, and see what happens there is that, like I spoke about this earlier, If market is offering great value in small cap sector, they will definitely invest little more in small cap. Okay, if market is not offering better value in small cap, at for that brief period of time, maybe 6 months or 1 year or 2 year, they may not go exceedingly high in small cap sector. They will go where the value is. The ultimate goal is to generate returns. It is not that you should be going in small caps to generate returns. No, it's not like that, because history tells us that like mid cap, small cap, sometimes, like in a prolonged time, 3 to 4 years, they do not perform at all. They never perform. They will be below the market average, and one time they will boom up. Okay, so like Nippon, like multi-cap, what you have selected is excellent. They will definitely invest when they have a very good market valuation in small caps, so you do not have to worry, they will take care of it. Okay, and you have done excellent, because instead of going directly into small caps, you have done structured investment through the multi caps. That will work for you. Sundar Mani is asking Nifty is in a range of 24,500, 25,500 for a long term. I am waiting for a long time to do lump sum, but it is not breaking 24,500. I am waiting for it to reach 24,000. Is there any chance to reach? It does not look like that, but 24,500 is not far, just 500 points. 500 points, if you take, it is only 2%. Okay, 2% will not make a very high difference, because I think you should be staggering your investment. So if there is a very good such a chance, then you can offload 50% of your money in 2400 levels, because you never know, it may go down to 23 also, right? So use staggering investment for your particular investment goal. And what you can do is that 24 and 25 is an excellent zone. I have been telling it since long time in my WhatsApp channel, you know it. Put it like, well, small amounts, you start pushing it. Okay, it will accumulate, because what happens is that what I am putting is only the index values, or how the market is on that particular day. But if you are investing, into the actively managed funds. Their like investment is different. There might be there they might have got some very good value stocks within them, and you might be investing at a very good valuation, right, if it is actively managed funds. So stagger it. Do not wait for too long time, because technicals do not suggest me at any point of time that it is going below 2500, because this particular time it was a very good chance for to break it 24,500, and it did not. Okay, so despite having 100% like tariff on pharma sector, it did not go below 24,500. Okay, so I think you should be doing it continuously in a staggered manner, and do not worry, it is only 2%. You can definitely trade it off. You may definitely get some other opportunity where you can make much more than that. Okay, Naveen Kumar is asking, thanks for clarifying. In SIF, my overall investment is about 1 crores. So I think I can take risk of 10. Definitely you can do 10 lakhs investment in SIF. See, both are new. It's very new. Edelweiss and Quant are both are new. Okay, and I sat with Edelweiss, the not fund manager, the marketing manager, and they said that it is very new, and those people who can definitely take it for 3 to 5 years horizon to get a better returns, they can definitely invest there. We do not have any data to talk about. We do not have any historical footprints of that particular like whole product itself, not even one AMC. So it is better to go with as minimum as possible, and try to leverage the new schemes in the market, and they are designed to give better returns. So let's see what happens. Okay, definitely we can see. You can go with that. Okay. Then Pratyay is asking, I start SIP from 2018. Excellent. Initially with SBI small cap, very good fund. I was investing at the time. Slowly I increased it to 20,000. Fantastic. Now I am investing SBI small, Nippon multi, Quant mid, PPF, Flexi, ICICI value. Okay, see, irrespective of the funds, what you have done is great. Increasing your investment to 20,000 is excellent. If you can get more investments to your portfolio, this is the right time to invest, because after 5 years you will see that I should have invested more. Even if it is 500 increment or 1000 increment, if you have that headroom, or if you have that extra luxury of investing more, definitely go and invest. All these funds, like maybe they are currently they may not be good, currently they may be excellent, but do not get away from your investments. Keep investing. Okay, you can add little gold as well, not a problem. 15 lakh portfolio, excellent. Okay, 15 to 30 years, very good, very good. You will be doing in crores, not a problem. Excellent. Naveen is saying that for past 1 year, Nifty returns are flat. So our investment returns in index, mid and small cap on multiple funds are also flat. Yeah, see, returns in mutual funds are not flat if you are investing systematically. SIPs have given positive returns, like 9%, 10%, 11%, or somewhere some people got 6.5% in XIRR as well. The point to point CAGR is flat. Okay, it is still minus 5.6 something. Okay, but those who invested during the dips and those who invested consistently in SIPs, they are in positive zone already, because they have come down, they invested better in their dips, and the market has recovered almost 12% now from the bottom. So they are in positive zone, not a problem at all. So keep investing consistently, definitely. We will get good returns. See, in the technical front, if you want me if you are asking me, I am seeing market somewhere around 25,500 to 26,000 in next 2 to 3 quarters, or maximum 4 quarters. We may reach there. We definitely going to reach there, because we bottomed out, and technical indicators, even the chart is making such formations, technical formations, saying that it is about to come to that particular position and break out. Okay, so it looks so good for us, and we are looking at that levels itself, like this levels, to accumulate more and more. This is what I am telling to my clients as well. Okay, they are doing it to maximum of their strength and luxury they have to invest. Okay, so yeah, we are expecting good returns. Okay, I plan for more than 10 years apart from flexicap. What other sector I can prefer? So you have flexicap, you have multicap, right? So it covers most of the things. But if you want much more diversification, you can go with some little portion to gold, or you can go with multi-asset funds as well, because it will take care of other assets as well. Okay, make sure that you have enough emergency funds as well, with gold and all these things. Okay, sectors, you do not go with specific sectors. Sectorial funds are very risky. Since you are not even ready to invest in small caps, I do not recommend sectorial funds at all to you. Okay, so go with the large flexi cap and multi caps. That will work well for you, and little bit of gold and silver. As silver is trending now, can I start doing SIP in Motilal Oswal? No, do not ask me about any AMC, but generally I can say gold funds, I cannot take risk for long term. I'm also 30% tax slab. Should I consider gold? Yeah, see, gold slab, gold or silver, if you hold it for more than 2 years, it will come under LTCG. It will not come under your income tax slab. If you are redeeming it, if you are withdrawing it within 1 year, then it will be added to your income. Okay, so keep it more than 2 years if you are investing in mutual funds, through mutual funds, which I recommend always. But if you are going into in silver and gold in terms of ETF buying, then it is only 1 year. Okay, it will come into large long term capital gain within 1 year. Okay, so you do not have to bother about tax slabs. Okay, health, wealth, and happiness. I am going to lose my job and get a settlement about 50% of my current portfolio. Okay, what should be the staggered investment strategy? I am planning to take a career break for a year and start my business. Okay, so 50% of your current portfolio, then what you can do is that, since you are taking career break, I think you should be using it as a cushion for yourself. Okay, because you are going to start a business, you may need that money for immediate some circulations or something. But if you have that money already, then you can stagger, say, I will take an example. I do not know how much you are going to get. Let me take 10 lakh rupees, or whatever the amount is, X amount. Okay, since the markets are very attractive right now, I think you can offload 30 to 40% within next 2 months, and stagger the next money, after, if the market is breaking some 25,500 or something, you can then stagger it for next 3 to 4 months or 5 months and invest everything within that range. Okay, but if you already got that money, then definitely this is the point. You can offload 35 to 40%, 30 to 40% money, and grow your stagger your rest of the money. Okay, so it will help you well. Okay, and if you do not have that particular emergency funds or something to navigate next 1 year to start your business, then definitely put it in a very safer assets. Okay, where it will generate some 6 to 8%. That is enough. It will help you for doing all the business things and any short term needs for yourself, right? So that you can do. Sundarmani is asking, US government is shut down. What that will that create impact in US market and Indian market? I am accumulating in 24,500 range again and again. So shall I wait to invest remaining amount in mutual funds? See, you can wait, but I do not. We cannot say that it will come back to 24,000 levels. Okay. 24,000 levels is little bit tough because it did not even touch 2500 this time, 24,500 this time. It was near to that, but it did not touch. Okay. If it goes below, if it is not breaking the near term, that 25 200 levels, 25 300 levels, then it may come down to like again 25 800, 24 800, 25 100 200 levels. It may go there. And as you said, that US government shutdown will definitely affect a little bit, but it will not entirely affect, because we are into domestic, this one, what we say, we are completely relied on our investments more, and all the investments what is going to market is from our money, SIP monies, and all domestic investors are investing more than FIIs now. Okay. So how market reacts is very difficult to say. But shutting down the government in US is not a permanent thing. It was very short term. Let's see if it is going to affect, then we are going to see 24,500 or below that. You can invest your money. Yeah, then buy gold in SGB. SGB, please do not go at this particular moment of time, because all the SGBs are trading in premiums. Premiums in the sense, if the SGB is costing 100 rupees, it may be trading at 109 or 110, or some SGBs are at 116. So minimum variance or the gap is almost 3 to 5%. So why do you want to invest in 3 to 5%? You can go and buy some physical gold itself, because you are paying only 3% GST and maybe 3% extra as making charges. Or you can go and buy ETFs, because ETFs, yeah, might be you are paying some 0.5 to 0.6%, up to 0.6% or 1% as premium there as well, but not as much as SGBs. Okay. If you get in a very valuation, right valuation in SGBs, yeah, definitely buy it. It is good. And Walalkani is asking, if I'm seeing good returns in my portfolio, should I book profit and transfer to debt funds, or can I leave untouched? See, good returns you do not have to touch, since you have told me that you have a very long period of time. Let it grow. But if you have a strategic rebalancing system within yourself, okay, where you want to rebalance according to the market scenarios, and definitely you can do that. Not exactly to debt funds. If market is showing some like fear or something like uncertainty in coming future, yeah, definitely you can cushion your portfolio, keeping some money in debt funds or something else. Okay, definitely you can do it. But if market is excellent, you shouldn't be doing that. Okay, let it grow, and you will definitely see the stress. Not immediately, within overnight it will not happen. It will take 2 to 3 months to show the stress and come down. So you can make it in a very strategic way. Pure gold fund or gold with silver fund of funds, both are same. Both are like buying gold ETF itself. They have a percentage allocation, for example 70/30 or 60/40 they may have. They are buying gold ETFs from the market. Okay, but they are buying it INAV, not in a market like premium. Okay, so which is why most of the mutual funds, even though they have additional expense ratio over and above the ETFs, they are doing well. Okay, and you have an option of not looking at the market and not buying at some up and downs, or you do not have time. They will take care of it. Like SIPs, it will work well for all many people investing in mutual funds, gold and silver. But only thing you have to remember about mutual fund is that it will take minimum 2 years to come under LTCG. Otherwise it will be directly into your income, which is worth. If I'm having multi-asset fund, should I need separate gold fund? Yeah, see, that is also something like portfolio levels of question. If you have decided that you want X percentage of gold in your particular portfolio, then go with gold fund itself. But if you do not know how much you want to do, and you are again scared about, or not certain about gold prices in coming future, whether it will correct or whether it will go up again, then it is better to go with multi-asset fund, where it will take care, like fund manager will take care like how much he has to invest in that particular funds. That will work well. because most of the multi-asset funds will definitely invest substantial amount of like money in gold, and when they see that market is stressing, they will definitely come down. So it is a well managed funds. Naveen Kumar is asking, if I have 10 to 12 lakhs to invest as of October 2025, can we invest as a lump sum in one flexi, one mid, and one small cap as equally split? We suggest a staggered investment of say 25k per month on 25k per month will take very long time. Okay, and as I said to like health wealth, you what you can do is that 30 to 40% you can put it right away in the markets. The like levels are very good, 24,800 somewhere around. Okay, and if you see like market is going upwards, you can stagger it to next 3 to 4 months. If market is falling, you can again invest a little more. Okay, and short term like headwinds will be there, and do not have to worry about even if it falls to 2400 or something. If you have more, you can just invest, but invest as per your current portfolio allocation. Do not go separately something like I like equally flexi mid and small caps. Don't go like that. What allocation you have allocated in your portfolio right now, okay, go with that. Okay, and if you see some other better opportunity in some like let's say small cap, let's say, okay, maybe like after 2 months you have some 3 to 4 lakhs remaining, and you see some very great quarterly results from small cap sector, you can go with small cap, because it is always about opportunity, how you leverage and how you capitalize the opportunities, right? So you can do, definitely, that is the benefit of staggering investment. You can definitely change your strategy as per the market trends. Walalkani has another question. Gold ETF versus gold fund, which is good for long term? See, long term gold ETFs, what happens is that you are always exposed to buy and like ask and buy bid. Okay, sellers will always sell at a higher price. You will be asking at lower price. That difference is called premium. If it is above the INAV, then you are giving higher rate to the person who is selling it. So that is completely like additional expense ratio to you. You are paying it well ahead. It's like prepaid. So whereas in mutual fund, what happens is that they are investing on behalf you, and they are managing your funds. So there will be another additional layer of expense ratio, but that is okay, because you do not have to give time for that. You do not have to see you. There is no emotional thing while investing in ETFs. You see some price going up and down, and you may feel that okay, today I will not invest, tomorrow market may fall down and I will invest, and market may go up. So systematically investing, I would prefer saying that go with mutual funds, not a problem. Only factor is that LTCG and income tax. Okay, 2 years you will have to wait. So if you can wait for 2 years, then definitely what I recommend for easiness and much more convenience, I would recommend mutual funds. And if you are an expert in timing the market in ETFs, where when the market falls or the gold or silver price falls, you are very good at timing it, that definitely ETFs, not mutual funds. Pradeep Mohapatra is asking, I'm investing from last year only in lump sum mode. Tata small cap, okay, 2 lakh, 6 lakh per, okay. See, like how are you investing in lump sum mode? I do not know. Maybe you are investing every month. Okay, but I always recommend go with SIPs, and if you have extra money, you can invest that extra thing in smaller lump sums. Okay, SIPs will do great job since you are investing for longer term. See, SIPs will definitely straighten up your cost in a longer term. If you are investing 7 to 10 years, 90% of dips are covered, already covered. 95% of dips are covered. So there is no meaning that you are investing in lump sum unless you do not exactly know how much you can invest in that particular month. Okay, but you will be knowing some minimum amount you can definitely invest in every month, right? So you hold on to that particular minimum amount. Whatever extra you have, you invest according to your portfolio mix, how much you have allocated to each sectors, and how much what is your risk appetite. Evaluate it and divide it as per that thing, and you invest. Okay, it is okay, it looks good, not a problem. Okay, 20-year horizon, what you have told is excellent. I would suggest you go with SIP mode. It will be very great for you. Okay, then lump sum of 25 lakh rupees for next year, go with like 2 lakh rupees or 1.5 lakh rupees per month SIP, and remaining whatever 25k or 30k whatever remaining on that particular month, you invest whenever there is a dip. So that will give you more leverage. Or what you can do, straight away go with 22 lakh rupees SIPs. You can do weekly SIPs if you want, 1 lakh every week, You can do like that. 25 lakhs will be distributed equally across the market up and downs, and you are going to cover 95 to 97, 98% of up and downs from the market. Not a problem at all. Okay, so you do not have to worry. Valalkan is asking, having mutual funds in SOA or demat form, which is safer and better. Both are safer. There is no problem about safety. Okay, SOA gives you direct investment with the AMCs, whereas demat will give you flexibility of pledging and everything. Both are same, but in demat what happens is that even if you are not using demat, you will be needing to pay that annual charges and everything, whereas in SOA you do not have to pay that annual charges, right? So both are same, like not a issue at all. Like how much convenient it is for you, that is very important. Both are same mode of investing, both will get fetch same NAVs, everything will remain same, only the mode of depository is different. Demat form, it will be very easy for those people who are looking for pledging or something else. For them it is very excellent. For them who do not want these kind of hassles, they just do not want to pay extra AMC charges and everything, go with the SOA. No difference at all. Ajay Saitanathan, yeah, SIF I have explained in this. I will go with a little a brief on it. SIF is a new product, as you know. Only those people who is having more than 30 or 40 lakhs as AUM, definitely you can go like up to 25% of your AUM you can deploy it. Okay, 15% is better. But if you want to try out something else, you can definitely go. Liquidity will be very low because you cannot withdraw 1 lakh out of 10 lakh rupees. The lot size itself is 10 lakh rupees. Above that, any amount you can do. If you have invested 11 lakhs, you can withdraw 1 lakhs, not 2 lakhs. Okay, that is one more thing. And thing is that you cannot frequently do that particular withdrawal transaction. Only once or twice in a month you can do. Expense ratio will be similar to mutual funds. The risk will be little more. Do not expect more than 12% as a market average. Okay, the fund may give more than mutual funds, or fund may like equally give as much as mutual funds, or fund may underperform as well, because it is very new platform, a very new product, it is evolving product. There will be a lot of new like innovations which may happen within the fund levels. Okay, there will be so many things happening, so do not expose too much into it. Definitely you can go with that, and it is hybrid mode. Okay, it is investing in hybrid levels, and it may not come under LTCG, like equity LTCG. Okay, in a short term short term horizon. Okay, so knowing all these things you can do, and it is a very new product. I would recommend, I am recommending all my clients to wait for some time, understand it, how, let's see how it walks through in the next 2 to 3 quarters, how it works out. Then we will jump into it, because every new thing may not be a great thing to jump on, because we cannot put our hands to everything, right? Yeah, gifting is available, but it takes a lot of paperwork. Okay, gifting is available, and some AMCs may make it easy in demat form. I am 30%. How to activate SWP? Sai Kasai is asking. Activating SWP is easy. Whichever platform you are using, go to your particular fund, go to redemption mode. Okay, or in the transaction section, you will be having initiate transaction. Going to that particular initiate transaction, you will be having SIP, SWP, everything options are there. Go to SWP. There will be option amount and units. Okay, some AMCs is given amounts and units, some given amount itself. Okay, so give exact amount how much you want to redeem every month. Okay, you can divide that into across funds. If you want some, let's say 30,000, and if you have some 5 funds with you, you can go with like 6,000 each, or 10,000 in one fund, or like that. You can divide accordingly, and you can initiate your SWP. It's very easy, and from the immediate next date what you have given, it will give you, it will start giving you. So Valalkani is asking, I am 30% taxpayer for debt portion, ultra short term or arbitrage funds, which would be good for me? For short term, arbitrage would be good, but arbitrage may not give you high returns if markets are very smooth. Okay, arbitrage funds will do well when the market is very volatile. Okay, but the tax advantage is definitely there, because if it is a longer term, if you hold it for more than 12 months from the date of investment, then it will come under LTCG, and you have 1.25 lakhs as exemption, and you will definitely save that particular tax outgo. You may not even pay at all. Okay, Okay, if it is too high, then you will be paying some 12.5% over and above 1.25 lakhs per year, right? But if your like investment is below that one, 12 months, still this arbitrage funds will do well, because short term capital gain is only 20%, but you may not get higher returns, because arbitrage we gauge only somewhere around 5 to 7% or 7.5% as benchmark returns. We do not go too much high on that, because it does not have particular guaranteed income or something like fixed income assets within it. Okay, so if you are targeting some returns, then it is better to go with the mix of this debt and arbitrage. You pay some taxes there, but you leverage both the things. Okay, if you have more than 1 year or 12 months of investment horizon, then it is better to go with arbitrage, because that tax portion will definitely help you with the gains. For example, if you get 7%, let's say in arbitrage funds, whole 7% is your return, because you are not going to pay any long term capital gains until like you reach 1.25 lakhs per year, right? But whereas in short term ultra duration funds or any debt funds, you are going to definitely pay 30% on that. Even if it is generating 8.5, definitely it will come down to 5.6 or 6% maximum, right? So it is better to go with arbitrage funds. So yeah, so maximum questions are done. We'll go back and see any of the questions are left or unanswered. If you have any questions on anything else other than this, you can drop here. Health, wealth and happiness, I think I have answered you about it. Career break, yeah, I have answered about it. Naveen Kumar, past 1 year Nifty returns, this one I have answered. Okay, portfolio became, yeah. Pratyay Saha, I think I have answered best of my knowledge and experience. If you have any more questions on this, and if you're online, you can put more questions if you want to. Amit Ji, if you have any. Dinesh Bishnoi asked about quant, yeah, I answered about this as well. Reviewing about your portfolio, yes, reviewing about, see, everyone can use that review portfolio using Motilal Oswal. Okay, they have review services. They do not charge for it. Okay, they may take little time, but they will definitely review your portfolio. They may give you one format where you have to put your investments, and they will review and let you know, because they are they have very strong research background, and they have recommendations with them, and they see most of the things. Like if you have some 30-40 stocks in your portfolio, there might be some stocks which may not work for next some particular months. They may tell you that suggestion. Taking the suggestion and acting is completely upon you. They will definitely give you a review on that. Okay, if you want to do that, you can connect with me. I can ask them to do it for free for you. Okay, not a problem about it. I personally cannot review your portfolio because I am not authorized for it. Okay, so it is always better to go with experts. They are experts in that. Okay, then, like most of the next section, I will try. I was trying to come every week, but it is little difficult to come every week. Since today we had excellent numbers of participants, I'll try to come every week. Okay, by weekends or something, like I will post well ahead, like 3 to 4 days well ahead of the time, and taking polls or something, I will get to know whether like many people are coming in or not. Then definitely we can make use of all our time, because when many questions comes up, many other people also get insights, right? So it will not be boring, it will be very continuous session, it will be great. Okay, so let's wait for another 2 to 3 minutes. If anybody has any questions, please drop your questions. I'll try to answer that, and if not, we can end up the call, right? End up the live session, and we can think about what can we do next. Any unanswered questions here? No, right? I think everything is answered. Excellent questions. One of the best live sessions I have done till today, because most very diversified questions as well. Many had different questions, many had different perspectives, questions on sectors, strategies. Excellent. Right, okay, then if you like haven't subscribed to my channel, please subscribe. You will get notifications on that. अदर दैन दैट मेरा क्वेरी रिप्लाई नहीं दिया. कौन सा क्वेरी था आपका? कैन गोल्ड बी 10% इन पोर्टफोलियो? डज इट इंक्लूड फिजिकल गोल्ड? सी, इफ यू इंक्लूड फिजिकल गोल्ड, that is excellent. And if your wife is allowing to include, then it is much more excellent. But if you can hold 10%, definitely 10% you can diversify. Okay, the 10% is some bare minimum, I would say, you should be having in your portfolio. You can extend it to 10 to 15% as well, not a problem. But if your portfolio size is very high, and if you are a growth mindset investor who is looking at some like equity kind of returns, definitely 10% is enough. You can definitely go. Anybody can go up to 10%, not a problem at all. प्रदीप जी, आपका क्वेश्चन कौन सा था? मैं इधर पीछे जा रहा हूँ. तो नेक्स्ट ईयर आई विल इन्वेस्ट लमसम 25 lakhs में, इसका बताया ना कि आपको 2 लाख का SIP कर सकते हो आप. लाइक अगर आप महीने का 2 लाख करते हो तो 50,000 का एवरी मंथ, एवरी वीक का कर सकते हो, है ना. नहीं तो एवरी 15 डेज का आप 1 लाख का SIP कर सकते हो. नहीं तो 2 लाख का कंटिन्यूसली कर दो नेक्स्ट ईयर का कंप्लीट. एंड जब भी आपको मार्केट अपॉर्चुनिटी देती है, जब भी आपको मार्केट डिप मिलती है, तो आपके पास अगर एक्स्ट्रा मनी है, एक्स्ट्रा पैसे हैं, तो आप इन्वेस्ट कर सकते हो, है ना. जब भी आप ये डिप्स का लिवरेज उठाते हो ना, आपको बहुत अच्छा रिटर्न्स मिलेगा. ओके, सो आपको और कौन सा क्वेश्चन था जो मैंने आंसर नहीं दिया? उसको प्लीज, कैन यू प्लीज रिपीट दैट क्वेश्चन? आपने ये क्वेश्चन था क्या? लास्ट ईयर ओनली इन लमसम मोड, टाटा स्मॉल कैप, मोतीलाल स्मॉल कैप, एडलवीज 6 लाख, पराग परीक, इन्वेक्सो फ्लेक्सी, ICICI फ्लेक्सी, कोटक मल्टी, नंबर ऑफ फंड 720 ईयर्स. देखो आपका लाइक फंड वाइज है ना, फंड का बारे में मैं नहीं बोल सकता हूँ, पर आपका एलोकेशन है ना थोड़ा डिसेंट लग रहा है. पर मेरा मुझे एग्जैक्टली पता नहीं है कैसा आपका पोर्टफोलियो है, डिजाइन कैसा है, कैसा एलोकेशन किया है. 20 ईयर्स के लिए आप जरूर कर सकते हो. जब नेक्स्ट ईयर जब आप 25 लाख का करने वाले हो, तो आप स्टैगर करके करो, इमीडिएटली मत करो, क्योंकि नेक्स्ट ईयर हमारा मार्केट सिनेरियो अलग रहेगा, है ना. आज का सिचुएशन अलग है, 1 साल के बाद हमारा मार्केट का सिचुएशन अलग है, क्योंकि लास्ट 5 से 6 महीने में हमको हमारा मार्केट बहुत चोट खा चुकी है ना. मार्केट 15 to 20% गिर चुकी थी, and that was the exact great time to invest, and I think you have invested in that particular time itself, right? We may not get that particular time again. So like अगर आप नेक्स्ट ईयर के लिए सोच रहे हो एंड आपके पास पैसे हैं उस टाइम में, स्टैगर करके करो. नहीं तो आप SIP कर दो, टेंशन नहीं. तो आपका सारा पैसा लाइक डिवाइड होके इन्वेस्ट हो जाएगा, एक एवरेज रिटर्न्स भी मिल जाएगा, एवरेज कॉस्ट भी मिल जाएगा. उस टाइम में अगर मार्केट गिरा है तो आप ज़्यादा इन्वेस्ट कर सकते हो, है ना. 30-40% इमीडिएट इन्वेस्ट करके बाकी पैसों का आप स्टैगर्ड इन्वेस्टमेंट कर सकते हो. इट इज़ कम्प्लीटली ऑन दैट पर्टिकुलर मार्केट सिचुएशन, है ना. अभी हम लोग सोचते हैं कि नेक्स्ट 6 मंथ के लिए हम स्टैगर करना चाहिए, पर अगर कल मार्केट 4% गिर गया, 24,000 से नीचे आ गया, तो हमको लाइक 30-40% डाल देना चाहिए, हमको वेट नहीं करना चाहिए, है ना. किसी टाइम में छोटा भी अगर ये मिल जाता है, मार्केट डाउनफॉल मिल जाता है, या ये मिल जाता है, डिप मिल जाता है, तो हमको इन्वेस्ट कर देना चाहिए. Direct or regular fund, which one is more good? See, direct fund is for those people who can take care of their investments. Okay, आपको अगर like if you can take care of your investment, you can do your asset allocation, fund selections, आपको goal planning के साथ आपको कर सकते हो, and you have time and proper knowledge on that. Go with direct funds always, because you are going to save somewhere around 0.5 to 0.8% as expense ratio. But if you do not know about it, and if you want somebody who wants to take care of your investments in a very professional way, then regular funds is excellent way to go, because 0.8% है ना, आप अगर छोटा भी गलती कर दोगे तो that will definitely go from your direct portfolio. And maximum direct fund investors who approach me, they are doing that particular issues, because इस market fall में है ना, they have lost so much money just because their allocation is not right. Okay, but there are some excellent investors who are with me in direct mode itself. They have done excellent work, but the thing is that there are some smaller issues, smaller loopholes where their returns are leaking. It is a complete perspective, and you do not see the cost. Okay, देखिए, like cost is everywhere. If you want to go to Delhi, you can either go by train or you can go by flight. The cost is different, but the way and the convenience what you get is different, correct? So if you have luxury of time and you do not have to reach or early, then you can definitely go by train, or somebody can go by walk as well, no problem. But if somebody is valuing time and somebody is valuing so much of other things other than the cost, then definitely flight is the best mode to go, राइट. सो डायरेक्ट एंड रेगुलर फंड में इतना ही डिफरेंस है. एंड दूसरी चीज़ है, डिफरेंस ये है कि रेगुलर फंड में वो क्या होता है, आपका पोर्टफोलियो एक एडवाइजर के साथ होता है, एक म्यूचुअल फंड डिस्ट्रीब्यूटर के साथ भी होता है. वो हमेशा उसको देख सकता है, जब भी आपको चाहिए वो देख सकता है, एंड उसको जब मर्जी होता है ना वो देखता रहेगा. मेरे जब व्हेन यू टॉक अबाउट मी, एक इन्वेस्टर का पोर्टफोलियो, क्लाइंट का पोर्टफोलियो मेरे सामने हफ्ते में एक बार मिनिमम आएगा. I will be definitely seeing it, and at any point of time if any clients ask me, I will be very knowing about that particular portfolio, because मैं रोज देखता रहता हूँ. 10-15 पोर्टफोलियो मेरे सामने आता जाता रहता है एवरी डे. एंड आपको भी वैसा करना चाहिए, है ना. जब आप व्हेन यू आर डूइंग वेरी डू इट योर सेल्फ थिंग, एंड इफ यू आर ट्राइंग टू सेव दैट 0.8% or 1% in general, definitely you go learn deeper and you invest, because आपको 1% बचाने में उधर 4-5% लीक नहीं होना चाहिए, एटलीस्ट 2% भी नहीं होना चाहिए, because that is almost double than the cost, right? And that compounds. Okay, both the things compound. So there is no biased thing that you should be going that here or there. Definitely you can do. Do I need NPS if I regularly do MFSIP? See, NPS is a different thing, completely different thing. It is not like mutual funds. NPS is going to help you in saving tax as well, right? If you are going to invest in NPS, and if it is for example, if your basic pay is 1 lakh rupees, 14% is monthly deduction. So 14,000 you are going to invest every month, and that 14% is going to save 30% directly from your tax outflow. Okay, 30% कितना हो गया, how much is it? 14 is almost 4,200 4,500 तक आपको बच जाएगा, right? 4,200 अगर if you are saving 4,200 every month by investing 14,000 in NPS, that means you are actually investing only 9,800 rupees to NPS, correct? And you are directly getting that returns. You no need to wait for 1 year to get that returns, and even if you wait for 1 year, you are going to get some 10 to 12% or 13% from the market maximum, if markets are good, normal, right? So what happens in NPS is that whatever returns you are getting is over and above the 30% tax bracket. You are saving 30% in the initial stage. Immediately when you are investing in NPS, then the returns what you are going to get from that investment. So if the NPS is giving you somewhere around 10 to 12%, take it 10%. It is 30% plus 10%. So NPS is good for those people who are planning retirement in a longer term. 60, after 60 itself you are going to get, but you have provisions to withdraw it in between, 3 instances. If there is any marriage of your children, education or home purchase, you can definitely withdraw a little bit. But you are going to get only after your retirement, after age 60. That too you can withdraw only 60% of the lump sum tax free. That is additional layer of benefit what you get. So if 14,000 is not affecting your cash flow monthly, I would recommend you can go with the NPS. It is going to give you more value. Okay, I think that particular one thing is very important. Key, out of 14,000 rupees every month contribution, you are going to get 4,200 rupees directly as tax saved. Why would you want to give that 4,200? Correct. So, but the problem is that liquidity. You are not going to get it immediately if you want. Only some certain instances, as I told you, home or something, you can get. Other than that, you will not going to get. Okay. Yeah. Pradeep ji, I think I answered that particular question, right? I do not think any more questions you have. If you have, please put the question in the comments. Let me see. Walalkani, do you have any other questions? Or Manoj ji, do you have any other questions? I think direct and regular funds, I gave you most biasless comparison, which is good for you, right? So you can think about it. Okay. Then yeah. So yeah, most of the questions are taken. We are good now. If anybody have any questions, we have 2 more minutes. I will give 2 more minutes. You can post it. I can take as long as you want. If you have more questions, I do not mind. Okay. So let's wait. So most of the things are covered, and again I want to emphasize that one thing: do not enter into any of the chats or WhatsApp group or Telegram groups where you are drawn into something or lured of higher returns, and putting your money into some platforms. Okay, which is why always go with very official links shared by the people who you follow. There might be influencers, there might be people who are genuinely having a firm registered with SEBI and so many things, but go with like official links. My own account is almost 3 to 4 fake accounts are circulating in Facebook. Okay, so do not go with that. All my official links are in my bios, and you know me, how I talk, how I do, how do I speak Hindi, how do I speak English, because when you see their message, you will understand it's a fake account. Okay, please do not do that. I need a lump sum money. Should I break my FD or arbitrage fund? See, arbitrage funds do not have very big exit loads. Definitely you can go with arbitrage. If FD is giving you higher returns, there is no question of breaking your FD. Okay, but FD attracts some income tax to you. Okay, FD will have penalty also. Okay, for emergency, do not break anything. Have an emergency fund with you. Okay, make a very good emergency fund for yourself. Then you do not have to break anything. It's completely planned thing, right? Whenever you have an emergency, you withdraw from that particular emergency fund. Correct? No, I am not a CA. I am doing my CFP, and I have enrolled myself for MBA in IIM Kozhikode. So I am doing all those things, and I am AMFI registered mutual fund distributor and channel partner with Motilal Oswal. Like it's like sub broker with the Motilal Oswal. Okay. Do you? I think you just joined. I think. Do you have any questions, Sharman Vora? Yeah. Okay then. So Valalkani, I think I answered your emergency question as well. Okay, you can connect with me as well. Like if you want to, you can get all these things. No, I am not a CA, but I have many CA contacts here. See, silver and gold accumulation is going on, and silver has made very high recently. Like 2 days ago, it went to very high. And you cannot think about investing lump sum all at once, but if you have a plan of longer period of time, you can invest, but do not invest as like gold, because silver is more volatile than gold. Okay, gold is not much volatile. Okay, there are instances that silver has come down drastically more than gold. Okay, so have your silver sized lesser than gold, but silver can be a part of your portfolio, not a problem. Okay, have it kind of SIP kind of thing going on. One of my client is doing daily SIP of some X amount, so he takes everyday volatility into in his portfolio, in particularly silver. Okay, so it is better. Is it possible someone saying he is doctor and has 4 CA, he says a lie? I think I do not know about it. I do not know. Maybe it's a lie, right? If you're talking particularly about me, I'm not neither doctor nor neither CA. Okay. Yeah. Okay then. I think we can wrap it up. Thank you so much. If you have any questions, yeah, you can just post it, put it here. Okay, you can connect with me through my WhatsApp channel. All the links are in bio. Thank you so much. Yes, there is one more question here, I think. Hi, how are you? Hello. If you have any questions, yeah. Nifty 50, it's excellent. What do you want me to talk about? Nifty 50. Nifty 50 is doing well, and I think it has done about its bottom journey, and it is getting better at 24,500 levels, and it is looking its way forward up. But global uncertainties is what is pushing it back towards that levels again, and it's a good accumulation zone is what I believe in. Accumulation zone, yeah, definitely 24,500, 24,800. we may not see it in next 6 months or 8 months maybe. Can we expect a good returns from silver for next 2 years? Yeah, next 2 years we cannot say, but in an immediate term, experts are saying we are going to get some accumulation in silver, since it is kind of hedge after gold. So I do not recommend going fully fledged into silver. It is better to go with staggered investments, okay, like SIPs, or whenever there is a fall you accumulate little bit every fall like that, or you can do a complete SIP. More than that, more than returns, what it gives you is that it gives you a very lesser correlation investment compared to equities. So this is where it is very important to you if you are investing in silver or gold. Okay. Kajaria Ceramic, no, I am not following it, and I am not authorized to talk about stock as well. Okay, Kajaria Ceramic is an excellent company, and it's been a very long time I did go look at that particular stock. Maybe I did not check it. Okay, Kajaria Ceramic, I did not check it because I have completely outsourced my stock recommendation to Motilal Oswal, and Motilal Oswal is taking care about stock recommendations and customer portfolios. Thank you so much, Sharman. Thank you so much for that. Yeah, fine then. You wanted to start SIP, which funds I have to look? Any funds which is good for which are having better expense ratios, and which is having better liquidity, which is also very important. Go with those funds which is having higher AUM in silver, even in gold. Okay, and if they have their own ETFs, or if they are investing in something else, look for it. Most of them have their own ETFs, no problem with that. And if you are investing in multi-assets funds, that is also good. They will be taking care of most of the things, not only silver, not only gold. They will take care about other things as well. Equity will also be there. So that is an overall investment practice if you are thinking to hedge your portfolio than the equities, right? So if you are completely focusing on silver, there are many funds, or 2-3 funds are excellent. You can definitely go with that. I cannot recommend some funds in a public domain, which is why I cannot say the fund names. Yeah, okay. Any more questions? Please put it in the comment box. Otherwise, we can wrap it up within 2 minutes. We can say tata bye bye for today and join again sometime next week or after 2 weeks. Very nice talking to everybody. Questions were excellent today. I would definitely appreciate that. You can join my WhatsApp channel. The links are given in the my YouTube bio. So if you go to if you get into that WhatsApp channel, you can get my contact details in that particular channel. Okay, you can definitely do that. Correct. What you said is correct. Specialization is business world often produces very good business economics. Correct. What you said is correct. Okay, fine then. We are past 1 hour, 1 hour 15 minutes. So yeah, take care. Thank you so much for joining, and thank you so much for contributing with your questions. Take care, Sharman. Take care, engineer CG. Thank you so much. Take care. I'm signing off today. Join my WhatsApp channel. Okay, I'll be posting my market insights and opportunities to invest in mutual funds. Whenever there is a market dip, you will definitely get better ideas how to invest your funds. Money in a smaller lump sums or something, and any other like market insights you will be getting only verified things. There will be no nonsense there. Okay, you can, it's a public domain. It is not something like WhatsApp group. It's a public WhatsApp channel. Join there. The links are given in the bio. Thank you so much. Take care. Signing off. Close.